Okay, so let's get started. Welcome everyone to our keynote talk today on the digital war. Today we'll discuss China's rising technological power and what it means for the global digital economy. I'm April Fong, Deputy Managing Editor of The Logic. For those who don't know us, we are a subscription-based digital business news publication that covers the innovation economy. I'm very excited today to introduce our keynote speaker, Winston Ma. He is an investor, attorney, author, adjunct professor, and expert in the global digital economy, cross-border investments, and multinational law and policy. Most recently, Winston was managing director and head of the North America office for the China Investment Corporation, China's sovereign wealth fund, where he made cross-border digital economy investments. At CIC's inception in 2007, he was among the first group of overseas hires, where he was a founding member of both CIC's private equity department and later the special investment department for direct investing. He held leadership roles in global investments, including the setup of West Summit Huashan Capital, a cross-border growth capital fund in Silicon Valley, which was CIC's first overseas tech investment. Prior to that, Mr. Ma served as the deputy head of equity capital markets at Barclays Capital, a vice president at JP Morgan Investment Banking, and he also served as corporate lawyer at Davis Polk and Wardwell. Today, he is the chairman of the advisory board of ThreeFold Tech, which is a decentralized cloud tech company in Switzerland. He's an adjunct professor at NYU School of Law and a member of the NYU President's Global Council. His latest books are The Hunt for Unicorns, How Sovereign Funds Are Reshaping Investment in the Digital Economy, and The Digital War, How China's Tech Power Shapes the Future of AI, Blockchain, and Cyberspace. So thank you for sharing your insights with FFCon today, Winston. I was thinking we could start with some of China's big tech news of late, especially pertaining to rising fintech regulations. As many of you know, last year, China's regulators halted Ant Group's $37 billion IPO, which would have been the world's largest public listing ever. It has since been ordered to restructure in a way that means it's regulated more like a bank, while China's banking regulator has also clamped down on online lending rules. Winston, can you tell me what do you think of these developments and what do you think they mean for Ant Group as a fintech company?
Sure, April. Thanks for having me. I think overall we can say that the rising regulations in China represent the end of the so-called wild growth of fintechs companies in China. It's good to start with the Ant example that you just mentioned, because last November, there's this blockbuster IPO of Ant Financial, and its suspension was sort of this a tipping point that urged all Chinese regulators to step up their regulatory actions against internet platforms like Ant Financial from all different angles. First, as you mentioned, fintech specific regulations, to regulate Ant more like a bank, right? And furthermore, we also saw antitrust actions coming up. More antitrust regulations come into the picture, impose record fines on platforms like Ant, Alibaba, and as well as more platforms to come, like Meituan, like Tencent. They are all subject to antitrust investigations right now. In fact, a new antitrust law is also coming. So antitrust is definitely another aspect challenging these fintech giants. And another upcoming regulatory action would be in the personal data area. A new law called Personal Information Protection Law, PIPL, is also expected to be effective in the coming months, because last week, actually, end of April, the Chinese legislature just had the second review of the the draft of the personal information protection law. So when these regulations come into effect from all these different angles, you can imagine the fintech companies like Ant will be subject to a much more rigorous regulatory environment going forward, and their growth cannot be as aggressive as people expected going forward.
Yeah, that's something that I wanted to note as well, because as you know, and you've noted, China's new online lending rules are also extending beyond Ant, right?
Yeah.
Last week, for example, 13 other tech companies, including Tencent, ByteDance, and the Fintech arm of Baidu, they were told to rectify their problems when it comes to following the new guidelines. And so I wanted to delve into that a little bit deeper. How do you think that China is hoping to protect consumers by reining in these tech companies?
Yeah, I think it's relating to the super app model that's very special in China. You know, the super app model means that the companies like Alibaba and Tencent, they all try to build up an ecosystem out of like one single app. With this app, people can do everything without leaving the platform. And for that, the mobile payment and online lending functions are the user traffic entry point, and that's why the fintech is so important to these giants. Yeah, you know, if you think about Alibaba, you know, it has huge e-commerce business, and it also has huge media and entertainment business. In addition, you know, they also, you know, the platform also covers everyday services, you know, everything you can imagine of, right? You know, like taxi hailing, paying the utility bills, so on and so forth. Yeah, and there's a thing that connects all the activities of the users is the mobile payment. Is a mobile payment. So what the Chinese regulators try to do is to separate the payment business from the other parts of the empires of these internet platforms. So, for example, you know, when the mobile payment is linked to the e-commerce, actually it creates multiple businesses. You know, the users put money into the digital wallet, and then they may have leftovers, and the leftovers actually become a asset management business for Alibaba, right? And for the users that do not have money in the digital wallet, instead they actually need to borrow money, you know, the mobile platform, you know, through the digital wallet, you know, have huge amount of data of the users, and based on that data, they can provide virtual credit card services to these users, you know, to give them micro loan to stimulate their purchases, right? So right now, I think the regulators try to separate the payment function from other related financial activities like lending, like asset management, right? And on top of that, it also tried to separate the data flow of the mobile payment side with other businesses in those ecosystems, and for that, you know, they think they can protect the investors both from the personal data protection perspective as well as their, you know, financial transactions perspective.
Do you think that's good for Chinese consumers or bad for Chinese consumers?
I think overall it's positive. It's positive because by doing that, you know, putting more regulation into the place, I think it may give the users a chance to get to the value of their data. You know, in the past, you know, we can really say that those platforms have freely collected personal data of the users for free and free of any obligations.
Right.
And going forward, you know, their collection will be subject to regulation. You know, no excessive collection, And secondly, how they use their data will also be regulated. And finally, you know, as the platform collect data, they have to be responsible for the security of that data. Yeah. So with these regulations, I think overall it is positive because it will give the users more control of their personal data, and potentially they can get some value out of that data.
And how will this rise in regulations affect the future of China's fintech industry, which has really been a global leader so far?
Right. Yes, you know, it's a good that you use the word global leader, right? Because in the example of Ant, during the last round of financing, it had a valuation of more than $250 billion. So it was definitely the largest unicorn of fintech in the world. And there are many other players in the field in China. Now, what's interesting about the implication of this regulatory developments is that it has twofold. It has two-pronged implications. I think on one side, you know, if you call it negative, we will see a huge correction of the valuation of the fintech companies. So for example, in the case of Ant, right? Recently, Fidelity, you know, the U.S. asset manager who invested in the last round, adjusted the value of the company significantly lower. You know, when you look at the Fidelity number, it's, you know, it was about cutting the valuation in half.
Mm-hmm.
It's about that scale, and actually that's quite modest. If you read a recent Bloomberg article, which suggested that the valuation of Ant Financial should be adjusted 90% lower. Okay, wow. So you know, we can say that the whole industry, the fintech industry in China, will have a correction time. You know, because the growth of such business cannot be as aggressive as before, right? Especially in the case of Ant, it will become a bank holding company, mm-hmm. subject to central bank's regulations. So you're not a tech company. So as a result, the growth and valuation will all be adjusted lower. Now, but the positive side of the regulatory development is that we will see a new generation of fintech companies to come. I think that what the regulation is suggesting is that the government do not think a business model innovation is real innovation. I think what the regulators saying is that we want real technology innovation, not moving traditional financial activities online, right? So going forward, you know, we will see more fintech companies, fintech startups to come with a real edge in technology, some unique intellectual property technologies. For example, you know, going back to Ant Financial, right? You know, it is the largest blockchain patent applicant in the world. You know, if you look at the top 10 blockchain patent applicants in the world, you know, Chinese companies occupy more than half of the top 10 spots, and Ant is number one in terms of the number of blockchain patents applied. This is just one example, right? You know, there are, you know, also developments in the AI, you know, big data analytics related areas. And I think, you know, going forward, we will see more of these tech-driven companies coming up for the Chinese fintech field.
That's really interesting. That's a really interesting point about how these regulations may, while it's regulating the companies, but it'll also encourage innovation and new technology. That's a really interesting point to make.
Right.
I want to turn our attention now to talk about digital currency and blockchain. China's been accelerating the development of its sovereign digital currency trial with the aim of launching it next year officially. JD.com, for example, has started paying employees with digital yuan. China also hopes to give visiting athletes digital yuan to make payments at the 2022 Beijing Olympics. Like, things are really happening. What kind of impact do you think wider adoption of the digital yuan will have in the future? What will it mean for the country's online payment companies like WeChat and Alipay?
Yeah, I think the digital, the DCEP of China, or the CBDC, right, of China, will take some market share away from the existing mobile payments systems. As we all know, right, Alipay and the Tencent Pay dominates the Chinese third-party payment market. You know, they collectively they control more than 90% of the market. Now, if you think from the perspective of Chinese businesses, why they like Alipay or Tencent Pay, mostly for two reasons. You know, one is convenient, right? They don't have to change money. They just always get an exact payment. And secondly, and a more subtle one is that if they take paper money, they always worry that they may get fake money, especially for small business. Yeah. So if a small vendor, right, you know, sells small items, and someone coming in with a 100 renminbi bill, which turned out to be fake, right? So it's very negative to the vendor for that day.
Right.
So in the past, you know, the Chinese businesses really push for the cashless society. You know, more than the Chinese consumers. The businesses, you know, really push for cashless society. Now, if you think about the DCEP, you know, Chinese digital currency, you know, it solved the both because you know it is just as digital as Alipay, right? And secondly, you know, since it's digital, you will not see fake money anymore, right? So when you look at these two issues that are being solved by the digital currency, you know, I think Chinese businesses will be very ready, will readily accept digital payment as like a third choice for their businesses next to Alipay and Tencent Pay. So I would think, you know, some of the market share will go to the new digital currency ecosystem.
And what are the implications for Western nations, especially the US and the dollar?
Now, I think the impact will be profound, but it will take time to really materialize. You know, to global policymakers, you know, China's effort, you know, in the digital currency, right, which is based on blockchain-like technology, suggests China is working on this topic to serve two strategic goals. You know, one is to be a power play in blockchain technology itself. You know, 2 years ago, right, Chinese President Xi declared that blockchain is a critical technology. Right. And this is like the first major economy leader to endorse the blockchain technology, which is hyped but not fully proven yet, right? So you can look at this as China push for a global leadership in the blockchain technology. And another one is really about the currency. You know, you know, this can be viewed as a way to accelerate the internationalization of Chinese currency renminbi, and it may eventually challenge the dominance of the US dollar in the global trade system.
Yeah. Yeah, that's really interesting. And that brings us to our next topic, the US-China technological divide, or competition, as some people would like to describe it. In the Biden administration's America Jobs Plan, the government has called for billions of dollars of investments in key technological areas, such as semiconductors and artificial intelligence. It's seen as a large part of the US-China rivalry with technology being front and center. How do you think this digital war is going to play out? Why is technology the big battleground right now?
Yes, yeah. Now, obviously, the digital war also, mostly is about tech competition, and in some context, it becomes more like a war. Like U.S. imposes sanctions on some Chinese companies, right? So when we look at this, essentially, we can say that the new center of geopolitics is technology. If you look at the U.S.-China tension, it started with a trade war, right? A trade war launched by President Trump.
Yes.
And then quickly the trade war became a tech war, right? Because the Trump administration started sanctions on Chinese companies like Huawei, ZTE, etc. And also, the Trump administration started executive orders against the Chinese companies in the U.S., like TikTok, right? TikTok was asked to divest its businesses to U.S. buyers. So overall, we can see that the tensions between China and the U.S. are increasingly going towards this competition for technology and data. That's the headline of the China-U.S. tensions, right? We see China-U.S. have so many conflicts in so many different areas, but this competition for tech dominance or innovation dominance is at the center of the China-U.S. conflict. And the reason is very simple. Since the world economy is going into is becoming a digital economy, the tech innovation power will decide the future dominance of these superpowers. That's why we see the technology related topics are becoming the center of China-U.S. tensions.
Yeah, and you've watched the Biden administration, in a way, become even stronger on some of its tech ambitions, right? In this rivalry.
You're right. You're right. I think that really proves the point, right? That it's about the new geopolitics. It's not just President Trump's actions or Mr. Trump wanted more attention on the Twitter. It is a very profound competition in the 21st century.
On that note, I wanted to kind of bring us back to you and the role you've played in trying to bridge China and the US together, not feed into this rivalry. And I think that really brings a unique perspective to our discussion. So I wanted to play this video that you have a starring role in. It's called Bridging the Technology Divide, and it was produced by the Financial Times and CFA Institute. So I'm going to play it now for our audience. I think it'll set up the next part of our discussion well. So if you'll just bear with me, I'll do some technological tinkering here and try to share my screen. Are we all, can you see it now? Okay.
The two most important innovation hubs on the planet right now are China and the United States. For the past decade, the US has led the digital transformation, but China's mobile economy has evolved in a very different way, moving more aggressively into mobile e-commerce. China has more than 750 million mobile internet users. It is a perfect testing lab for investments in mobile-first digital ventures. Some say that if the story of the 20th century was about the rise of the US, the story of the 21st will be about the rise of China. But I say, why does it have to be either or? Surely there will be competition, but why can't the two countries work together? I think we can work together, and I want to be the person to make that happen. I was an investment banker in the US and later returning to China to be a managing director at the China Investment Corporation, working on foreign investments into China as well as Chinese investments into the world. I'm in a unique position to bring China and America together. I believe we can bridge the gap between these two centers of excellence. Now is the time to bring together global investments to collaborate on the fourth industrial revolution.
Great video. And it certainly makes me miss seeing the Bund skyline.
Yes. It's a Shanghai and New York, right?
Yes, yes. Two places where you have a bridge.
And the two places I studied before and I worked before, So, I studied in Shanghai as well as NYU in New York. And also I was a lawyer in both in China and the US, right? And before I worked at CIC, I got the training from the Wall Street. So it's always about US-China synergies for me.
In the video, you made an interesting comment, why does it have to be either or? And, alluding to the fact that the two countries should collaborate on the fourth industrial revolution. What do you think is the best way to make this happen? And is it really possible for China and the US to collaborate on tech and innovation when things are really kind of butting heads at the moment?
You're absolutely right. It's a tough question, but to me, it's definitely possible. Why? Because it must. Earlier you mentioned about the chip industry, right? That the Biden administration continue the work, continue to focus on the self-reliance of the supply chain of the semiconductor, and the same is true for China right now, right? Because after the tech war, 2 years later, right now we have a global shortage of semiconductor chips, and it's a great example that that for a global supply chain like semiconductor chips, it's just impossible for one country to manage every parts of that. Yeah, and when you disrupt that global flow of capital, talents, and innovation, what you see is a disruption. What you see is a disruption. And we can say the same thing for other research areas, right? Like AI, like blockchain. These are data intensive technologies that can benefit from global flow of data as well as talents, of course, right? So going forward, in order to get more breakthroughs in research, right, we need more collaboration. Now, there will be competition for sure, right? But I think the competition is also good for innovation. What's negative about the digital war is to stop the flow of data, capital, and the talents, right? And for that, it will lead to a lose-lose situation. And in the case of semiconductor, we're seeing this global shortage right now.
Absolutely.
Yeah.
And how do you think that Canada fits into this potential for collaboration between the US and China? What role does it have to play in this digital rivalry?
I think Canada can play a super important role, as like the middle ground between China and US tension. You see, in connection with the China-US tech competition, US has has amended many investment laws, right, to limit research capabilities into the ownership of Chinese capital. So for lots of the US companies, they cannot take Chinese capital anymore. right? Because those investments will be blocked by the new U.S. regulations. But for that, right, we can see countries like Canada, Singapore, etc., may benefit from this tension to be the oasis in the middle of the war. So what do we see is lots of companies set up their R&D. Was that the video page? The YouTube page probably was playing in the background.
I apologize for that.
No worries, no worries. I can talk about that another. Yeah.
Okay. Please continue.
Oh, okay. No, I think Canada can play a very important role, in the middle of the China-U.S. war, because the U.S. has set up a series of new regulations that prohibits research capabilities to be into the hands of Chinese capital. So that means for many U.S. research companies, they cannot take China side of investments. So what we see is that many tech companies have set their R&D centers in quote-unquote neutral places,
right.
Like Canada, like Europe, Singapore, etc. So that they can continue work with both innovation hubs, China and the U.S. at the same time.
Yes, that's really interesting. How Canada may be a player, a neutral player in this rivalry. I think we're running out of time, Winston. So is there anything else that you wanted to chat about still, or?
No, I think to summarize, I think China is still the most interesting fintech market in the world right now. Even though you see so many regulations just coming up, like just last 6 months, right? We see this new, a new series of regulations come into this field, officially declaring the end of the wild growth era for the Chinese fintech companies. However, I think because China is such a large user market, nearly 1 billion users, and it is such a mobile first society, meaning everyday activities are all on the mobile devices, which leave huge amount of data on the digital system. China is the most dynamic and innovative market right now for fintech, because it does not have the same kind of established banking system in the US. Right. Actually, China has leapt into a mobile only, and now going forward, data focused fintech system. So I think going forward, we will continue to see interesting startups coming up from China's fintech scene, especially blockchain, because in China, crypto trading is prohibited, right? So therefore, for Chinese companies in that field, they have to work on blockchain technologies, set them up as blockchain technology companies instead of a crypto trading companies. So as a result, we see many Chinese blockchain companies working on foundational technologies in the world of blockchain. Going forward, we may see very interesting unicorns coming from that direction.
Very interesting. It seems like a very bright future ahead for the fintech industry and for China's technological rise. It continues to grow. Thank you very much for your insights today, Winston. I'm sure our audience has learned very much from you. And I look forward to speaking with you again.
Yeah, thank you. Thanks for having me today.